There are a lot of AI stocks that have done particularly well already. I like to think of NVIDIA as one. Everyone's heard of it. NVIDIA has done phenomenal. They're clearly at the top of their game. However, there has to be stocks that haven't quite benefited from an AI boom. Maybe people aren't thinking about them. Maybe just for whatever reason haven't gone up as much. I think Vertiv is an example of another one that has done very, very well, up 800% over the last 5 years. That's very good. They're going to benefit from all these data centers and AI centers being built. They already have. However, a lot of that future growth is already priced in. They've been doing well, but their PE is really high, somewhere in the 70s, 80s. NVIDIA's PE is higher than the S&P. It's somewhere about 50. It's not crazy high, but these three stocks I've found for you today all are at or below S&P 500 valuation of PE, meaning these are cheap on average stocks. But they also have a really big chance to go up a lot if they just do things right. They're one of those like a Vertiv when you see, oh man, if I just bought before, here I'd be up 800%. These are the stocks that you can get before the run up because they're cheap, they're in AI spaces, and they can really benefit if they do things right. NetApp is the first one we're going to look at. Its PE ratio is 22.5. This company is dramatically, or at least significantly below S&P 500 PE, which is about 27, right? And PE is just the ratio of, okay, you bring in this much profit, and then your share is worth this much. This is a blanket ratio for, okay, you're at this level. So anything below S&P 500 is pretty cheap. Anything above is more expensive. And this one's at 22.5, so it is decently cheap. And they've only gone up 94% over the last 5 years. They are a company that does cloud computing and AI computing stuff. They do AI solutions, provide them to customers. So this is a company that is right in this AI field. And if they can get customers, or they can use AI solutions adequately, they're a company that can go up and go up dramatically, especially considering where the PE is at. So I like NetApp. I like it a lot. They're a decent sized company at 25 billion. They aren't super small. So I think this is a really good risk-reward ratio. And then we have Lam. I like Lam Research. They're a little bit different than the other two. They use AI more indirectly, meaning they provide resources for the AI being built. For example, they provide a lot of resources to TSM and Samsung, which fabricate the chips for NVIDIA to use to actually make the AI chips. Lam is a key essential piece of that. Their PE ratio is almost the exact same, ironically, as NetApp at 24.5. So this is a company that is below the S&P 500. Now, unlike the other two here, these can go up almost in the ceiling is just incredibly high. This one, there's a little bit more of a cap on the ceiling because this company does require to give resources to TSM and other ones. They're more reliant on a third party. They can't just go crazy because they can only really provide to a handful of companies. However, if AI continues to go up, Lam will continue to go up because it can't be built without them. It literally just can't. All the machines they build, they're just too high quality and they're really essential. Now it's possible someone could come up and replace them. That would probably take a long time. This is not a small company, $101 billion market cap. What they do is very important to AI. And if AI goes up, they will as well. And this is, like I said, a company that is cheaper than the average company on the stock market. NICE is the last one I'm going to look at. This is also the smallest one at about 11.8 billion. This is one of those companies that was doing very well, like very well. Since 2014, late 2014, it's up from 50 to 180. So even then, you're dramatically outperforming the S&P 500, which is only up about 200%. And you're up, like I said, from 50. So you're clearly doing better than that. Over the last 5 years, it doesn't look as good. And that's mainly because they're down so much from 2021. They were at 300, now they're at 185. Now you're saying, okay, that means they've done bad, right? Actually, that is incorrect. They've more than doubled the profit they make since these 2021 highs. Now you're saying, that doesn't really make any sense, and I would agree with you. I think because this is a smaller company, and I think because it was valued at that rate, people just kind of forgot about it, kind of gone to the wayside. But with what NICE does, right, they do the cloud stuff, they do AI stuff, they are primed. If they continue to even grow at this rate, this will be a decent stock, but especially if people catch on, and it goes back to the PE ratios it was around here at 80 or 90, which don't get me wrong, that's high. But if we get in the 80 or 90 PE without growing at all, you're going to 3x. Now, I'm not saying that's going to happen, but we're looking at a risk-reward ratio. This is a stock that's valued right around S&P 500 PE, which is at 27. They're at 29. Forward PE is a bit lower than that, actually. but this is a company that's right at the average stock. It's doubled its profit since 2021, and it's had a history of having PE that high. It really has. NICE is one of my favorite. I think people are really, really underestimating it. I think it's going to do very well over the next 3 to 5 years. These, in my opinion, are all long-term holds. I don't think they're all going to just shoot up immediately, but who knows? I think they have a good chance to. I'm not a trader. I can't predict the future within 1 year. I wish I could. That would be awesome. But I think these stocks have a real chance of going up dramatically, increasing their PE ratios dramatically because of what they do. If they even have a couple of wins, they'll go up a lot. But at the very least, even if they didn't go up extreme amounts, I think they're good companies that make solid profit, and you'll do decent on them anyways. So if you are new here, I'd appreciate if you liked or subscribed. I do daily stock content on this channel, and I appreciate all of you for watching.